Good morning, everybody. Welcome to today's Morning Coffee with Mike. I hope you had a great weekend. Happy Monday to you all. Today, I want to talk to you about this idea of having a plan B. I was talking to one of our clients last week about plan B. Let me know if in the chat, type into the chat if you have a plan A, a plan B, plan C, especially when it comes to your trading. And by plan A, B, C, I'm not talking about how a trade could progress, but I'm talking about having multiple strategies set up, right? So if this strategy doesn't work out, then I'll try this one. If this one doesn't work out, then I'll try that one. Let me know if you have those types of plans set up, plans A, B, and C. Type into the chat. Let me know if that's where your head is at. I want to really dig into that topic. Something else before we jump into that too, I want to let you know that my new book is available everywhere. The Trading Mind Wheel, you could get it on Amazon, Barnes & Noble, Walmart, Target, everywhere books are sold. Go to tradingmindwheel.com to grab that book. It's like no other. It reads like a novel and it will certainly help your trading. Lots of people have had great things to say about it already. So let's talk about this notion of a plan B in your trading. So if you're trying to set up multiple strategies, right? So if strategy A doesn't work out, I'll try out strategy B. If strategy B doesn't work out, then I'll try strategy C, so on down the line.
I found this on the web.
Apparently Siri found something on the web about it. But here's my feelings about plan A, B, and C and doing all that, going that route. I think that it's a big problem. And the reason why I think it's a big problem is really it ends up doing 7 harmful things by having this idea of a plan B. The first thing, I wrote them all down here too so I didn't forget. First thing is you become overextended. What do I mean by overextended? So if you're trying to run multiple races and you're trying to learn how to swing trade, you're trying to learn how to day trade, you're trying to learn how to do growth investing, or you're trying to do value investing, all these things require specialization. If you're trying to do them simultaneously, you're both of them are going to suck at the end. You're not going to be very good at any one of them. You'll be semi-okay in one, semi-okay in another. Maybe one works some of the time. Maybe another one works some of the time. But the reason why none of them work well is because you haven't mastered Jack. And that's the first problem. Just the first problem with having this plan B. Second thing that makes it problematic is that it's really a fear-inducing thing. So, what do I mean? What I mean is that because you're not mastering this one thing, you don't really have a full understanding of how it works, how it doesn't work, how to make it work well. And so the moment that it starts to fail, your plan A, then, something's wrong, let me go switch over to this. And you end up bouncing back and forth like a ping pong ball. Part of it's fear of this plan not working out. Part of it is the fear of failure, right? So that's why people try to set up plan A, B, C. They think that they're setting up a safety net for themselves, but in reality, what you end up doing is digging a hole for yourself. That's the opposite of what we really want to do, isn't it? Next up, Overwhelm. This was a big one for me, and part of this I'm speaking about from people that I've worked with. Part of it I'm speaking about because I've made all these kinds of mistakes myself during my own trading journey, and I want to help you avoid the types of mistakes that I've made over the past 25 years of trading. If I can help you avoid mistakes, then I feel like I'm doing a good job for you. So, Overwhelm. Overwhelm is a big one. And the reason why is because if you start doing one thing and then you start doing something else and then you're trying to do all these different strategies, that the feelings of overwhelm and confusion, trying to do too many things all at the same time, that leads to additional stress, additional fear kicking in, and more mistakes to boot. Lack of commitment is another problem with having plans B, C, D. When we're committed to one strategy, one area of focus, we're able to master that one thing. Having multiple plans, plan B, C, D, as far as having all these different types of strategies and not committing to one strategy, it's leading us down a black hole. Yeah, mentioned lack of mastery already, that's 5. So having this plan B really becomes a self-fulfilling prophecy. Well, what do I mean by that? What I mean is that if you're not setting yourself up for success with your plan A, well, whatever you select, whether it's going to be growth, whether it's going to be swing trading, whether you're trading Forex, whether you're going to be a value guy, whatever it is, if you're coming up with plans B, C, and D that, if value doesn't work out, then I'll become a growth investor. No. By trying to run these different types of races at the same time, you're basically setting your plan A up to fail if you're approaching it in this way. So a better way to go off and do it, and you also end up becoming mediocre in each one of these other strategies too, which we mentioned. So those are the 7 things, right? Overextended, fear, overwhelm, lack of commitment, lack of mastery, self-fulfilling prophecy, and you're mediocre in all these things. That's what happens when you come up with plan B. So forget about plan B. Here's what you need to do. Focus on one strategy. Focus on mastering one strategy. You might start to think to yourself, well, how do I know which strategy I should be focusing on? Which one should I master? What happens if I pick the wrong one? That goes back to the fear that's driving all this plans B and C and D. And the only way that you're going to know which strategy is going to be right for you is to go and test and try to master this one thing. Read about them first. Expose yourself to what all the different types of strategies that are out there. A great book that can help expose you to a large variety of strategies is Jack Schwager's Market Wizards. He interviewed many of the top traders on the planet through the years and wrote a book series about it. That it'll teach you all about the different swing trading strategies, value strategies, different hedge fund managers, retail traders. So you could see, well, what strategies resonate with you, and then you could dive deeper into those kind of strategies. And that's how you could start to see which path you want to go down. Well, another great book that I recommend is the one that I just wrote, The Trading Mind Wheel. What that's going to do is teach you all the different skills that are needed to trade well. No matter what it is that you are going to, whichever path you're going to go down. So get that. And stick with one plan, stick with your plan A, forget about the other ones. As they say, the best way to take the island is to burn the boats. Just go one path and make it work. Let's see, well, what questions you guys have for me down here in the comments. See a lot of people joining in. Good morning, everybody. I'm doing well. Fahim, how are you? Let me know what kind of trading questions you guys have, or if you have any questions about that rant to kick things off, the plans A versus having a plan B. I really think that you're better off forgetting about having a plan B when it comes to selecting your trading strategy. Just find a strategy that you like, go all in on that one strategy, and learn it, and spend some time up front trying to figure out, well, which strategy do I like, and just start going down that path. Understand that as you're going down a certain path, you'll find other things that will help you customize the strategy for you. That's what happened to me. That's what happened to so many others. The one that finally resonated with me after so many years was William O'Neill's Can Slim methodology. It's growth, it's momentum based. And then later on, I learned how to customize it for myself. I found out about Mark Minervini, who does much shorter term swing trading, holding for about a month to 3 months on average on his big winners. Then I started to learn about guys like Nicholas Starvis, who was trading back in the 50s and was trading part-time. All these different kinds of things. So you'll start to learn how to customize different strategies for yourself, and that's really the path. Start to find one type of methodology that fits you, that fits your personality, that you kind of like, and then start learning that, and then find other ways to make it fit better and better for yourself. And that's a big part of what the Trading Mind Wheel does for you too. That's the book that I just wrote. If you're interested in the Trading Mind Wheel, tradingmindwheel.com, or click the link in my bio. And we have some Nicholas Starvis fans in there. Eka, good morning. Let's see. Well, what other questions do you guys have for me this morning? All right, if we don't have any other questions this morning, we will look to wrap things up. So if anybody wants to join me live too, this is the main purpose of the show. The main purpose of these Morning Coffee with Mike is to bring you live with me and have a one-on-one conversation with you guys. So if you're interested in joining me live, if you're interested in doing a live coaching session right here, go click the link in my bio. I'll also post the link in the stories too. So that way you could book a time and share the questions that you have, share the parts of trading that you're struggling with, and then we'll be able to have a conversation right here live on Instagram and really try to get to the core of what the struggle is and help you get beyond it. So do that. Check it out. Let's see. Now we've got some questions coming in. Now that we've got 3 minutes left, let's see. Philemon, I'm looking for a strategy that issues the 1 to 3 reward to risk ratio. Yeah, most of the trades that I consider have at least a 3 to 1 reward to risk. Oftentimes it's 4 to 1, 5 to 1. I like to try to go for trades that have much more upside, where my risk is this much, but my reward is that much. And when you set that up for yourself, you're not relying on having a high batting average. A lot of people talk about like 60, 70, 80% win rates. My win rate is only about 45%. So I'm losing trades more often than I'm winning trades. So how do I make money? It's by that reward to risk ratio, by winning a lot more when I win and losing a small amount when I do lose. Question from Legend. So when you plan your trades, does it happen that you start fearing that your trades may not be correct, even though you are a pro trader? No. So the way that I think about my trades is each trade is one trade out of the next 100 trades, one trade out of the next 1,000 trades. I know that there's going to be winners and losers. So my job isn't to... Like I don't see myself as the guy that's the player in the game, right? That I'm trying to make something into a win, or I'm trying to avoid something being a loss. I'm more of the referee. I'm more of the game master, where I come up with the set of rules. I decide which trades get to be players in my game, and then after they're admitted into the arena, then my job is to be the referee to say, okay, you're following the rules. Hey, you're not. Yeah, you're kicked out. That's how I look at it. So there's no emotion tied to any one particular trade. If I make a bunch of money on a trade, sure, I'll be happy for a moment, but then it's just on to the next one. If a trade loses a little bit, it's no skin off my back. If a trade blows up, right, the occasional trade that runs up or the trade that just gaps down on you, I've had that happen as well. Those aren't problematic either, and the reason why they're not problematic is another skill that I talk about in the trading mind wheel, the trade management skill, where we're learning how to sell into strength, how we're learning to position size correctly, all skills that are very important to not only help us make more money while we're trading, but also help us to minimize losses and to minimize the effects of an adverse market event where price suddenly goes against us and we could lose a lot. There was a trade about 2 weeks ago. It was a popular one. I posted about it. I forget the name of the trade, but a lot of people were caught in it. This thing gapped down, I think, 45-50%. And now it's bothering me. I want to remember the name, but it's not coming to me. But we spoke about it both on here and on the YouTube, and just through simple trade management, we would have broken even on this particular trade by selling into strength on the way up, and then when it does gap down, well, it's not gapping down on your full position, it's gapping down on the little bit that you had left. This is why selling into strength is very important and something that we teach both in the book and my other program, the Mara Elite program. So I think that's all the time that we have. Yeah, we're about a minute over. So that's it for today. I hope that you enjoyed this morning coffee with Mike. Again, if you want to join me live tomorrow, later in the week, click the link in my bio and schedule a time for yourself. I'll see you guys tomorrow. Take care. Much love. Peace out, everybody.